Preparing for a finance manager at Adidas interview, you've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about your experience and why you want to become a finance manager at Adidas. I have built my career around combining strong financial control with practical commercial insight. In previous roles, I owned forecasting, analyzed profitability, and partnered with sales and operations leaders to improve decisions. Adidas appeals to me because its global brand, product innovation, and mix of wholesale and direct-to-consumer channels create complex, meaningful finance challenges. As finance manager, I would bring disciplined analysis, clear communication, and constructive challenge while developing the team and linking financial outcomes to business actions. While answering, connect your technical finance background with commercial partnering, leadership, consumer sector interest, Adidas's global operating model, and your motivation to improve decision-making rather than simply report historical performance. Question 2. How would you build an annual budget for an Adidas business unit? I would start with the business strategy and translate it into operational drivers: units, average selling price, channel mix, launches, promotions, returns, headcount, marketing, and logistics. I would challenge historical run rates rather than simply roll them forward, then model base, upside, and downside cases for demand, currency, and margin. After aligning assumptions with commercial leaders, I would establish monthly ownership, review actuals against plan, and refresh the outlook when market conditions change. Make sure to cover bottom-up operational drivers, historical trends, product launches, channel mix, pricing, foreign exchange, headcount, marketing investment, scenario analysis, ownership, and alignment with strategic targets. Question 3. Which KPIs would you monitor for Adidas, and how would you use them? I would monitor revenue growth, gross margin, sell-through, inventory weeks, markdown rate, full price mix, DTC revenue, conversion, average order value, operating expenses, and cash conversion. The key is not producing a long dashboard, it is identifying cause and effect. For example, weaker margin might reflect excess inventory, promotional activity, freight, or unfavorable channel mix. I would use leading indicators such as traffic and sell-through to anticipate financial outcomes and trigger timely actions. In your answer, talk about revenue growth, gross margin, sell-through, inventory, DTC share, conversion, average order value, working capital, operating expenses, cash generation, and linking indicators to corrective actions. Question 4. How would you explain a significant gross margin miss to Adidas leadership? I would separate the miss into understandable drivers rather than present one unexplained percentage. I would quantify price, volume, product mix, channel mix, markdowns, freight, sourcing costs, foreign exchange, and exceptional items, then compare each with budget and prior year. For example, a margin decline could be caused by higher promotional sales rather than weaker pricing discipline. I would finish with actions, owners, timing, and an updated forecast so leadership understands both the problem and the response. Be sure to mention variance decomposition, price and volume, product and channel mix, markdowns, freight, sourcing costs, currency, one-offs, clear visuals, accountability, and an action-oriented recommendation. Question 5. Describe how you would forecast revenue for Adidas's direct-to-consumer business. I would forecast stores and e-commerce separately because their operating drivers differ. For stores, I would use locations, trading days, traffic, conversion, average transaction value, and comparable store trends. For e-commerce, I would model visits, conversion, basket size, returns, marketing activity, and site availability. I would overlay product launches, seasonality, promotions, and channel cannibalization, then reconcile the detailed build to the corporate revenue outlook. Weekly performance reviews would help identify changes before month-end. Focus on stores and e-commerce separately: traffic, conversion, average order value, store productivity, assortment, launches, promotions, returns, seasonality, customer behavior, and reconciliation to the broader company outlook. Question 6. How would you manage inventory risk in a global sportswear business? Inventory risk is both a margin issue and a cash issue. I would monitor weeks of supply, aging, sell-through, open-to-buy, purchase commitments, cancellations, and expected markdown exposure by product and channel. Finance should challenge demand assumptions early, especially for seasonal or trend-sensitive products, while partnering with merchandising and supply chain on reallocations and replenishment. If excess stock develops, I would quantify the cash and margin impact, evaluate controlled actions, and reflect realistic provisions in the forecast. Make sure to cover demand planning, purchase commitments, lead times, sell-through, inventory aging, weeks of supply, replenishment, markdowns, obsolescence, working capital, and collaboration between finance, merchandising, and supply chain. Question 7. How would you analyze the profitability of a new Adidas product launch? I would build a contribution model covering expected units, price, discounts, product cost, royalties, freight, duties, marketing, returns, and channel-specific costs. I would also consider cannibalization of existing products and the inventory investment required before launch. The output should show break-even volume, margin sensitivity, and cash timing under several scenarios. After launch, I would compare sell-through, realized price, and marketing efficiency with the original case, then update the forecast and future launch assumptions. Discuss volume, price, product cost, royalties, marketing, logistics, returns, channel economics, cannibalization, working capital, scenario analysis, break-even, and post-launch performance measurement against assumptions. Question 8. What is your approach to forecasting foreign exchange impacts at Adidas? I would first distinguish transaction exposure, such as purchases or royalties in foreign currencies, from translation exposure when overseas results are consolidated. I would map currency flows, timing, hedging coverage, and relevant budget rates, then show reported and constant currency performance separately. A sensitivity table would demonstrate the effect of key currency movements on revenue, gross margin, and operating profit. I would coordinate with Treasury and accounting so forecasts reflect hedge impacts and avoid presenting market-driven movements as operational performance. In your answer, distinguish transaction and translation exposure, identify currencies and timing, separate constant currency performance from reported results, understand hedging, and communicate assumptions and sensitivities clearly. Question 9. How would you improve working capital at Adidas without damaging growth? I would focus on inventory first because availability and obsolescence directly affect both growth and margin. I would segment stock by demand profile, improve forecast accuracy, accelerate replenishment for winners, and manage slow-moving products earlier. I would also review wholesale collections, credit terms, supplier terms, and payment timing without damaging strategic relationships. A useful scorecard would track cash conversion, service levels, inventory health, and customer impact, ensuring working capital actions support profitable growth rather than simply reducing balances. Be sure to mention receivables, inventory, payables, payment terms, service levels, product availability, supplier relationships, cash conversion cycle, ownership, and balancing liquidity against customer and brand commitments. Question 10. How would you partner with marketing and merchandising teams at Adidas? I would begin by understanding their objectives, decision calendar, and commercial language. Rather than only challenging spend, I would help evaluate expected reach, demand creation, sell-through, margin, and return on investment. For campaign, I would agree success measures upfront and distinguish brand-building benefits from short-term sales effects. My style is curious and fact-based. I challenge assumptions respectfully, provide alternatives, and follow up after execution so finance becomes a useful partner, not a barrier. Focus on building trust, translating financial concepts, evaluating return on investment, challenging assumptions respectfully, agreeing measurable outcomes, and making finance a decision partner instead of a retrospective control function. Question 11. What would you do if actual results were materially below forecast halfway through the quarter? I would first validate the data and determine whether the gap is timing, execution, or a structural change in demand. Then I would isolate volume, price, mix, inventory, channel, currency, and cost drivers with the responsible teams. I would produce a revised base case plus downside and recovery scenarios, quantify corrective actions, and assign owners. I would communicate the change early without protecting an outdated forecast. Credibility comes from explaining what changed, what remains uncertain, and how we will respond. While answering, cover rapid diagnosis, data validation, driver analysis, stakeholder discussions, forecast re-estimation, scenarios, corrective actions, escalation, and preserving credibility through transparent communication. Question 12. How would you ensure accurate monthly management reporting under tight deadlines? I would establish a close calendar with clear responsibilities, dependencies, and review deadlines. Before reporting, I would validate source data, reconcile key balances, check unusual movements, and apply materiality-based analytics. Standard templates and automated exception checks can reduce manual errors, but judgment remains essential for provisions and estimates. I would require owners to explain material variances in business terms, then perform a final management review. The objective is timely reporting that leaders can trust and act upon. Mention a clear close calendar, reconciliations, data validation, materiality thresholds, automated checks, variance ownership, review controls, standardized commentary, and prioritizing accuracy without sacrificing useful timeliness. Question 13. Which international financial reporting standards topics are especially relevant to Adidas, and how would you apply them? For Adidas, I would pay particular attention to inventory valuation, revenue recognition, leases, foreign exchange, provisions, impairment, and financial instruments. Inventory requires careful assessment of cost and net realizable value, especially when products become seasonal or slow-moving. Revenue analysis should reflect transfer of control, returns, discounts, and channel terms. I would involve technical accounting early for judgmental matters, document conclusions clearly, and explain the operational and reporting consequences to commercial stakeholders. In your answer, address inventory valuation, revenue recognition, leases, foreign exchange, provisions, impairment, financial instruments, and the importance of translating accounting conclusions into business and reporting consequences. Question 14. Tell me about a time you improved a finance process. In one role, monthly forecast consolidation relied on multiple spreadsheets and created inconsistent assumptions. I mapped the process, identified duplicate inputs, and worked with IT and business owners to create a standardized driver-based template with validation checks. We reduced consolidation time by roughly 40%, improved version control, and gave managers clearer variance analysis. I also documented ownership and trained users, because a process improvement only lasts when controls, accountability, and adoption are built into the solution. Be sure to use a structured example covering the original problem, root cause, stakeholders, redesign, technology or automation, control improvements, measurable benefits, implementation challenges, and sustainability of the result. Question 15. How would you handle a disagreement with a senior commercial stakeholder about a forecast assumption? I would first understand the stakeholder's evidence and clarify whether we disagree about data, timing, or judgment. I would then compare the assumption with historical performance, market information, customer inputs, and leading indicators. Rather than making it personal, I would present a base case and alternative scenarios showing financial consequences. If disagreement remained material, I would document both views and escalate through the agreed governance process. I would stay collaborative while ensuring the forecast remains evidence-based and transparent. Focus on listening first, clarifying definitions, using evidence, testing assumptions through scenarios, separating facts from judgment, escalating appropriately, and maintaining the relationship while protecting forecast integrity. Question 16. How would you lead and develop a finance team at Adidas? I would set clear expectations around accuracy, timeliness, business partnering, and professional behavior. I would understand each person's strengths and development goals, then combine coaching, stretch assignments, technical training, and exposure to commercial meetings. Delegation would be deliberate, with appropriate review rather than constant intervention. I would give regular feedback, recognize strong work, and address gaps early. A high-performing team should produce reliable analysis while developing successors who can operate confidently beyond routine reporting. Mention role clarity, coaching, technical development, commercial exposure, feedback, delegation, succession planning, psychological safety, performance standards, and adapting leadership to individual experience and capability. Question 17. Describe a time you used data or automation to improve a finance decision. I once combined sales, inventory, promotion, and margin data into a dashboard that highlighted product and channel profitability weekly. Previously, management saw results only after month-end, so corrective action was late. I standardized definitions, built exception flags, reconciled outputs to the ledger, and trained users to investigate drivers rather than just view charts. The team reduced unnecessary promotions and improved decision speed. The important lesson was that reliable data governance and clear actions matter more than sophisticated visuals. Talk about the business question, data quality, tool selection, model design, visualization, user adoption, control environment, measurable outcome, and how automation enhanced judgment rather than replacing it. Question 18. what internal controls would you prioritize in an Adidas finance role? I would prioritize controls around revenue completeness, inventory existence and valuation, purchasing, vendor master data, journal entries, account reconciliations, access rights, and management estimates. Segregation of duties and approval limits should reflect risk, while automated controls can prevent duplicate payments or unauthorized changes. I would test whether controls operate consistently, retain evidence, and investigate exceptions promptly. Controls should protect the business without creating unnecessary friction, so I would focus effort where financial misstatement or fraud risk is highest. Make sure to cover segregation of duties, journal approval, reconciliations, master data, access controls, purchase to pay, revenue completeness, inventory controls, estimates, evidence monitoring, and proportionality based on risk. Question 19. How would you evaluate a cost-saving proposal that could affect Adidas's brand or customer experience? I would evaluate more than the headline saving. I would quantify implementation costs, recurring benefits, service level effects, product quality, customer satisfaction, and potential brand damage. For example, reducing logistics cost may be unattractive if it materially increases delivery failures or lost sales. I would compare options through scenarios and, where possible, recommend a controlled pilot with measurable thresholds. The best saving is sustainable and supports profitable growth. Shifting costs or harming demand is not genuine value creation. Discuss total economics, customer and brand impact, quality, service levels, implementation costs, risks, pilot testing, scenario analysis, and distinguishing sustainable structural savings from short-term accounting reductions. Question 20. What would your priorities be during your first 90 days as finance manager at Adidas? During the first 30 days, I would listen, understand the strategy, map stakeholders, review reporting, and learn the key revenue, margin, inventory, and cash drivers. In the next month, I would assess forecast quality, controls, team capability, and the decision calendar, identifying a few low-risk quick wins. By day 90, I would agree a prioritized roadmap with leadership, including measurable improvements in insight, efficiency, and control. I would build credibility through curiosity, reliable delivery, and visible follow-through. In your answer, cover listening, stakeholder mapping, reporting quality, business drivers, team capability, control risks, quick wins, forecast process, priorities, and a practical roadmap aligned with Adidas's strategic needs. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.